Stock markets and crypto crash. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, and I thought tonight we'd just have a look at some of the more drastic movements in the market today. The stock market here in Australia and in Japan took a little bit of a shave. Crypto had a huge move, a big move. Now, when you're doing any trading or investing, you've got to look at your time horizon, your perspective. A big move like that, this for a day trader may be an opportunity for them. They could short it, they play the market, they provide liquidity that the market needs. If you're investing for the long term, you shouldn't, you should keep an eye on it, I guess, but you shouldn't really allow it to influence your decisions. That's my approach. Long-term investment for passive income and storing wealth, not trading. So I wouldn't really call myself a trader. I'd say I'm more an investor. So I was watching, the market yesterday as everything was going right up. Everything was green. It was a great start to the year. It was fantastic. I'd still DCA'd into some shares I'm buying. Today, everything went, it's going pear-shaped. It's coming back down. Again, I DCA'd, dollar cost averaged into some shares I'm buying. If you're a regular of the channel, you know I bought some AGL shares quite some time ago, and I've been dollar cost averaging them in to buy more shares, so I'm in a profitable position, guys, because it wasn't really the best buy. I went in just before their announcement of the split of the company, and their shares went tumbling down, but I'm still confident in them for the long run, and I'm interested to see what happens with the split. So that's why I'm dollar cost averaging back in. So that's my approach to it. I'm not letting this affect me. I'm not responding to it emotionally. When I first started, buying into the market, right back a couple of years ago, when we were seeing the beginning of market concerns and fears, I was going into silver. I was buying CFDs for silver. And I was watching the market go up, down, up, down, up, down. And before that, it was crypto. I'd be mining crypto, then trading it, trying to flip it for a profit. I'd be buying one and it'd be up a huge percent on some. This is where I learned about how rumors and news pump stuff in crypto. And then just as the news didn't appear, or the news did appear, it crashed right back down. So it's all these lessons that you have to learn. And the only way to learn it, you can read it in books, but the best way to learn it is investing in real world experience and discovering what type of a investor or trader you are. There's some people that just, love to trade and watch it and do all the analysis and just go with the flow. But I can't watch it that closely, to be honest. I don't think I get too obsessed about it. So let's check the stock market right now. So here we have trading economics. This is the ASX 200. So the S&P ASX 200. It dropped 2.74% to close 7,358 today, posting its biggest decline since September 2020, as the technology and other growth stocks sold off on fears over a more aggressive monetary policy tightening by the U.S. Federal Reserve. So is this the gradual move out of growth stocks and tech stocks into other sectors? The latest Fed minutes revealed U.S. policymakers considered quicker interest rate hikes and discussed quantitative tightening this year to tame persistently high inflation. Well, it looks like it certainly isn't transitory anymore, is it? Losses in the tech sector were led by Afterpay, down 10%, Zip down 6.1%, Novanex down 7.3%, Zero down 4%, Wise Tech Global 5.5%, BrainChip Holdings 3.8%, and even my favorite, my most successful investment of the last year, good old AussieBroadband, they're down too. I'm annoyed. But then all my boring stocks are going okay. All other sectors of the market declined, with sharp losses from the big four banks, higher growth lithium explorers, and giant healthcare firms. Meanwhile, Australia's daily COVID cases soared to a fresh height on Thursday, which overwhelmed hospitals, while isolation rules caused labour shortages. And these isolation rules, this is what we're seeing in why we're having empty shelves. It's a logistic issue. People can't get tested, or they have to isolate. So you don't have as many workers or staff. It still takes time to iron itself out, everyone. Remember, we're transitioning from the insane government lockdown response to an endemic illness, and it's going to take some time. The comments there about the healthcare system, and I'll discuss this in another video. I was talking to a friend, and he's quite concerned at the capacity of a doctor, quite concerned at the capacity of ICUs, and he's mentioning that they will essentially not provide intensive care beds for those over 65 with COVID. So we'll have to see if that actually happens in Australia. So if we scroll down here, we can see we've lost all the gains we made in the last couple of days, pretty much. But still, if we zoom out to 5 years, yeah, it's not that bad, everyone. We'll have to see if this is the beginning of this sharp fall. There, 45, 59. I mean, if it falls, okay, if say we get another fall like this, and we say we're down at 5,000, okay? Everyone goes crazy, it goes down to 5,000. Are you going to sell your shares at the bottom? If it's a good company that's actually making a profit and paying you money, no, you're not. No, you're going to see, damn, I'm going to take advantage of this and buy the dip. But you've got to buy the dip in something sensible, not some weird, crazy growth stock that is priced to the moon, which has got no chance of making any profits. You want to buy something that's still going to be profitable. But at least that's my approach. Okay, so let's have a look at Japan. So the Nikkei 225 index dropped 2.8% to close at 28,488, while the broader Topics index fell 2.07 to 1,997 on Thursday as technology and other growth stocks sold off over fears of more aggressive. So the same thing. Notable losses included Tokyo Electron, Keyence, Recruit Holdings, M3 Inc., and Advantest. All other sectors declined. Meanwhile, Japan urged the US to consider restricting American troop movements in the country after a surge in COVID cases on bases and the surrounding communities. There you go. More issues that they're having there. So if we go, once again, I mean, the market's moving all over the place in Japan, but still within this range. So, there's their big fall. There you go. So from 16,000 all the way up to 28,000 is still pretty good. They broke 30,000, but they've dropped down. Now, another sector to look at. Crypto, guys. Crypto. Now, this morning, I sold some of my Ethereum that I mined, about a week's worth of Ethereum. I'll sell and I'll flip it to buy some shares. That's what I've been doing. Right now, the computer behind me, it's mining some Ethereum. I think I need to restart it, kick it in again. When I'm not recording, this one will be, when I'm not working, I'll just use the graphics cards to mine Ethereum. And I thought, I bought these AGL shares. Look at that, they're down a couple of cents. I made a terrible mistake. Then I had a look at crypto, and I wasn't following it today, but it's been a big move. Look at Bitcoin. In 24 hours, down 8.38%, guys. Now, you've got to understand that these are huge moves if you want to use this as a currency or if you want to use this as a store of wealth. But one thing we're seeing, it's now correlated with the market, with predictions of what the Fed's doing is impacting Bitcoin. It's no longer a non-correlated asset. It was meant to be, okay, the market goes down, Bitcoin is stable, or Bitcoin goes up. That doesn't happen anymore. This is what happens when you get more people buying into it. And more, big investment. We have a look here. Ethereum, it's down 12.10%. So Bitcoin's at 42,000, guys. It's one to watch. If it gets below 40,000, there should be some support at that level. Or if it just sinks even further. Ethereum, I was looking at it this morning. It was, 3,800. And it's gone down to 33, down 12.09% in a day, everyone. Still affordable for me to mine on my graphics cards, but, not when it gets even cheaper. But there you go, guys. Look at that move. In one day. What would happen? I mean, let's have a look. Look at the volume in the last 24 hours of Tether. Tether's one to watch. Will all of a sudden more Tether be created and pumped into the market to boost Bitcoin? What happens if Tether falls over, guys? Binance Coin down 9%. Solana down 13%. Cardano, my understanding is like Coinbase has halted deposits and trading on that, down 9.8%. So they're all pretty much correlating to Bitcoin, except Chainlink. Chainlink's up in the last 7 days. Chainlink is up. Is that the only green? US dollar coin, yep. Chainlink up 20% in the last 7 days. You've got DAI. Cosmos up, but still down 10%. Yeah, in the top 100, there's not much green here, guy. Internet Computer's still around. Wow, that's gone down from that high. It appeared in the top 10 and then got smashed. What else? Yeah, a little bit of green, guys, but a lot of red. Oh, remember when Neo was meant to be the new Ethereum? See, here's the thing. I was in crypto. Oh, look at that. KuCoin token, $20. Not bad. I was in crypto back when it was in 2017, I remember. And there are all these projects that were meant to be the next big thing, and none of them have amounted to anything. You know, Dragon Chain, what's happened to that? Who's using that? All the investment that was going there. You see these coins that were $2, $10. I would mine stuff, you know, like a CPU-based coin on an old server, and I'd be getting $50 a coin. Oh, and I'd be finding 5 of them because I'd be just soul mining this stuff. And now, yeah, completely gone. So here's a good tweet from everyone's favorite Bitcoin critic and gold fanatic, Peter Schiff. If Bitcoin breaks 42,000, it's heading to 30,000. If it breaks 30,000, it could crash to 15. All this might happen very soon. If you've borrowed money against your Bitcoin, you'd better sell enough Bitcoin now to repay your debt rather than be liquidated at much lower prices. Now, that's a good point. If it's going to crash and you've borrowed money for it, you could be in quite a messy situation. And the thing is, a lot of people do this insane leverage trading in Bitcoin, guys. It's just nuts how some of it is. Now, another little bit of crypto news that I want to look at. Nation forced into a drastic Bitcoin ban. A European nation has said it will bring the law down on crypto miners after the vast amounts of energy needed for the task led to a crisis. A European country has banned Bitcoin mining because the large amounts of energy the process needs is crippling the electricity grid and contributing to blackouts. The government of the Balkan state of Kosovo, which is small, has said security services will find those who continue to mine cryptocurrency and prosecute them. So you got a country here banning crypto mining because of the energy impact it's having on their grid. You know, you've got to understand this is having a carbon impact, an environmental impact on countries around the world. And not all of it is going to be renewable, guys, and we've seen it. I mean, let's bring up an example right now. Let's say you're mining crypto in Australia at this very moment. Let's have a look here at some of the renewable energy. We'll go to Victoria. How's it going? Come on. Oh, boy, these wind farms. 25%, 23%, 15%. Here we got one over at 65%. So they're doing okay, but there's a lot of them dead. They should have more on the coast, really. And our coal plants are running red hot, as always. And the hydro's doing okay. Still 39, 85% good. All the solar, not doing a thing. So you've got to understand, it has an environmental impact. And I wonder if that'll be part of the argument, well, to restrict more countries' access to it or to make mining more difficult. What do you reckon? Anyway, guys, thank you for watching this episode. Let me know your thoughts and opinions and how you approach this market, guys. What strategies are you going to do? How are you going to prepare yourself? Going down the emotional roller coaster ride of the stock market. Anyway, I want you to check out this video I just did yesterday about, well, people finally being given good government health advice, and a look back at what Australia used to put out there for us. I somehow don't think you could get away with it these days. Take care, everyone. Have a great day. I'll see you tomorrow. Bye for now.